With the election less than 2 weeks away, how are election jitters affecting the economy? Let's take a look at what happened this week. Before we begin, remember to like this video and subscribe for more economic updates. One of the most anticipated reports this week was the release of October's Flash Manufacturing and Services Purchasing Managers Indexes. Both indexes, which measure business activity in their respective sectors, came in close to expectations. The services PMI edged up from 55.2 to 55.5, moving slightly further into expansion territory. Economists had expected the services PMI to remain unchanged from September's reading. The manufacturing PMI wasn't as positive. S&P Global reported it at 47.8. While this is a modest improvement over September's 47.3 and slightly above the 47.5 forecast by economists, it's also the fourth consecutive month that the manufacturing PMI has been below 50, indicating contraction in the sector. Elsewhere this week, on Wednesday, the National Association of Realtors reported that sales of existing homes fell by 1% in September to a seasonally adjusted annual rate of 3.84 million, the lowest level since October 2010. Economists had expected sales of previously owned homes to be slightly better at 3.9 million units. Compared to last year, existing home sales were down 3.5% last month. Analysts say the September data is another sign that the housing market is effectively frozen due to mortgage rates remaining near 7%. Despite the Federal Reserve's recent half-point rate cut, Samuel Toombs, chief U.S. economist at Pantheon Macroeconomics, said, "Only large Fed policy easing will meaningfully change this calculus." However, the following day brought a different story. On Thursday, the Census Bureau reported that sales of new homes jumped 4.1% month over month in September to a seasonally adjusted annual rate of 738,000. This result solidly beats economists' expectations of 720,000 for the month. Year-over-year sales of new homes are up 6.3%. New home sales in the Midwest were strong last month, rising nearly 20% on an annual basis. Regarding the sharp contrast between existing home sales and new home sales in September, analysts say new home buyers aren't as constrained by high mortgage rates as current homeowners. This is because home builders can offer buyer incentives to improve available rates and move new home inventory. Still, even with the better-than-expected results, new home sales are about 25% below where they were 4 years ago. Finally, on Wednesday, the Federal Reserve released its latest Beige Book summarizing economic conditions across all 12 Fed districts. Officials at the Cleveland Fed mentioned that several producers are holding off on ordering raw materials until they have a better understanding of consumer spending post-election. Notably, this Beige Book contains 15 mentions of election uncertainty, effectively double the number found in the October 2016 and October 2020 editions. Currently, markets are pricing in a 90% chance that the Fed will cut rates by another 25 basis points next month. That's it for now. Make sure to join us on Monday when we dive deep into what's happening with the economy right before the election. This is Devlin Steele for Augusta Precious Metals signing out.